Hey, Tim Curley here with your Friday FAQ. Let's talk about gift funds. Three quick things to know if your buyer is getting a gift to cover the down payment and or closing costs or any of the money needed for closing. So number one is it matters who gives the buyer the gift. It matters who gives the buyer the gift. If you're doing a conventional loan, the gift has to come from a relative or fiance, domestic partner, or some kind of a housing agency. Okay, that's on conventional. On the government programs, they will allow same relatives, but they will also allow a gift from a close friend with a clearly defined relationship. So that's important because if you're getting a gift from someone who is not your relative, then you're not, and not a fiance or domestic partner, then you're not going to be able to use a conventional loan. You're going to have to go with one of the government programs. So that's very important to note that. The second thing is it matters when and how the gift funds are conveyed. Okay. It matters when and how the gift funds are conveyed. So from a lender standpoint, the lender has to be able to show the gift money moving from the donor to the buyer of the home. And so if that money is conveyed or given to the buyer before closing, then that's going to require the lender in some form or fashion to verify that it came out of the donor's account. And it might be uh, by looking at the donor's bank statements, the whole bank statement. So that's really not something that generally you want to get into. You don't want to go down that road. So the best path, and if you don't remember anything else about this video, the best path on gift funds is to number one, have the buyer talk with the lender, talk it over with the lender as far as how this is going to work. And number two, have the donor give the money to the buyer at closing. Because in most cases, the cashiers are certified check with the donor's name on there on conventional loans anyway is going to be enough to show that the money came from the donor, and you don't have to get into looking at bank statements and stuff like that. Now on FHA, you still have to have a 1 day bank statement, but you don't have to get the whole bank statement. So the most important thing is to have the donor hold on to the money, give it at closing, talk with the lender about how this money is going to be moving. It's not the end of the world if they give the money beforehand. Just know it's going to be some extra documentation for the buyer. Third thing is to know is it could affect the buyer's ability to qualify. Okay, it could affect the buyer's ability to be approved for the loan. The reason I say that is, if you're trying to do any of these loan programs, let's say, and the buyer has a credit score that's barely above the minimum, maybe the debt to income ratio is a little high, the buyer has no money in the bank, and all the money for this transaction is coming from outside source or an outside source. All these programs have their own automated underwriting systems. And whenever that algorithm runs everything through there, it may not like the fact that all these other factors are, marginal or a little bit out of whack. And this buyer doesn't have any of their own money. They've not proven the ability to save any money, no reserves in the bank or anything like that. All the money is coming from, a gift from a relative or whatever. So it could affect the buyer's ability to be qualified. And that's something that the lender will be able to help the buyer with as well. Hope this information is helpful to you. If you have questions about gifts or anything else, please feel free to reach out. I'll be glad to help. Thanks for watching. See you soon.